Happy Tuesday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, April 8th, 2025. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions and to see if you need to make any changes in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is tradable low or bottom, round two. Our answers are stocks are rallying across the globe this morning as macro unaware investors demonstrate their Pavlovian response to a 20% decline in the S&P 500. Indeed, down 20% is usually when the Fed bails them out. As we coached investors throughout the 2022 cross-asset crash, however, you don't buy when there's blood in the streets, you buy when there's a catalyst to clean it up. Fed liquidity, everyone's favorite and most obvious bear market bottom catalyst, is likely months away. There simply has not been enough damage to the labor market to justify easing policy with inflation still comfortably above their preposterous 2% inflation target and heading higher over the medium term. Elsewhere, S&P 500 Q1 earnings growth is now seen at 6.7%, down from 11.1% when Trump won the election in November. Full year 2025 projections have dropped to 9.4% from 12.5% previously. Why would earnings grow at all in 2025 is a question that investor consensus has yet to seriously entertain. Why? Because most bottom-up investors wait around for the companies to tell them. As always, heading into economic downturns, the companies don't know. They'll blame uncertainty instead of acknowledging cyclicality in their business, their industry, or the broader global economy, effectively prolonging the bear market in the process. If earnings were the only thing that mattered to stocks, and to be clear, they are not, stocks are unlikely to bottom until the global buy side gains confidence that their haircut to earnings growth is roughly in the area code of accurate. Lastly, the Senate's more friendly economic budget resolution faces stiff resistance in the House. President Trump backed the Senate budget resolution last week and may now need to do the political whipping himself to sway House holdouts. In all caps, he wrote, "The Trump must pass this budget resolution and quickly make America great again," he posted on Truth Social yesterday. All told, until the Fed signals QE, companies broadly kitchen sink their 2025 sales and earnings guidance, and or Congress legislates a larger tax relief and spending package that represents a much more positive fiscal impulse than what deficit hawks in the House prefer, investors should treat every rally in risk assets as a mere bounce from a tradable low, as opposed to the actual bottom. Print this paragraph out and leave it on your desk for the next 2 to 3 quarters. Transitioning to our 42 Macro dashboard, our new and improved 42 Macro dashboard. As always, we'll wrap it up with a question from our community. This one's not a question, but a comment. It says, new signals. I love this. Much easier to read and sort and way more straightforward. Thanks, CD. And what they're talking about is the new or reorganized, the upgraded signal section that we are launching this morning, which displays our KISS portfolio construction process, our discretionary risk management overlay, aka Dr. Mo, and our volatility adjusted momentum signal, aka VAMS signals. So let's just give you guys a brief overview of the value we continue to add for our clients here. So on this tab in the signal section here at the bottom left, we show KISS. The chart on the left shows the gross exposure for KISS, the current portfolio. As you can see, we're still at 67.5% cash, 0% stocks, where we've been since March 5th. We're at 30% gold, and we're at 2.5% Bitcoin. The chart on the right shows the beta adjusted S&P delta. So it takes that position based on the correlation and the covariance of that asset relative to the S&P 500 and creates a S&P 500 exposure out of that. So gold would essentially be this 30% position in gold would be a 4.87% position in the S&P 500, and this 2.5% position in Bitcoin would effectively be a 3.25% position in the S&P 500. So it helps investors, understand the broader exposure to what everyone's most important asset in the world is, which is the S&P 500. Transitioning to our Dr. Mo signals, as we can see here, the Dr. Mo signal shows the last price, the current volatility adjusted momentum signal indication of the condition of that asset, and as well as Dr. Mo's proper trade recommendation for that asset. If you click anywhere in the gray, you will see a chart pop up that shows our historical Dr. Mo signals over time. You can scroll the chart. The Dr. Mo signals, we have daily data going back for all of our signals, going back to January of 1998. So you can definitely check out how Dr. Mo would have performed in markets past, with the dark green being a long max position, the light green being a long half position, the gray being a no position, and the yellow being a short half position, and the red being a short max position. For those who may be new to our research, there are no short half positions for the equity and crypto exposures because that's tend to have the sharpest V bottoms at bear market lows. And so that's an institutional macro risk management insight that we have used to program our discretionary risk management overlay signal, which is again is a institutional grade risk management overlay primarily for buy-siders, but we also have very sophisticated retail traders, high net worth type individuals, family office type individuals following these signals as well. And then lastly, with our volatility adjusted momentum signal, we'll scroll down and find the S&P here. You can see the historical time series for the VAM signal for this particular asset. So again, in this chart, the dark green is the bullish VAMS condition, orange is the neutral VAMS condition, is red is the bearish VAMS condition. So in terms of how our models work, Dr. Mo and KISS both absorb the signals from our volatility adjusted momentum signal model, as well as our global macro risk matrix, which measures the volatility adjusted momentum signals across 42 of the most important markets in the world in order to determine what the market regime is. And whenever we have a significant shift in the market regime, i.e. going from a risk on regime to a risk off regime, or we have a significant shift in stocks, gold, Bitcoin, or any one of the assets that Dr. Mo keeps proper trade recommendations for, it'll make that change and signal that to our clients in real time so that they can make a change in their portfolio to remain on the right side of market risk. And I say this all the time. You don't have to remain on the right side of market risk. You can be like everybody else that woke up to the Liberation Day and lost a bunch of money and not remain on the right side of market risk. But I guarantee if you continue to not remain on the right side of market risk, you're not going to have very much money to invest in asset markets without. So I hope everyone's well aware of this. And this is why, I'm really proud of what we've done for our clients, not just this year. We're one of the few people who was ragingly bullish for the past 2 years that actually pivoted and got bearish in time to protect their clients and their clients' assets. That's a heroic call, and it's coming off us helping our clients properly risk manage the bear market we called for back in 2022. So, we've been on an epic run. And the reason we've been on an epic run is not because of our views on growth, inflation, liquidity, all the stuff that everybody's talking about on TV and on these podcasts. That stuff's very important to understand why these signals are what they are. But the reason 42 macro clients continue to consistently outperform, and this is 4 years now of consistent outperformance from our client base relative to all the rest of the investors in the world, is because of our KISS and Dr. Mo signals. And we're really proud to present them with this dashboard upgrade here today. So everyone have a wonderful day out here. Darius Dale here presenting our macro minute for Tuesday, April 8th, 2025. Best of luck out there. We'll catch you back here tomorrow. Cheers.